Hi there. Welcome back to the session that helps you avoid FOMO and panic. And we are going to go through ICP, FET, and TAO, these deep tech and AI crypto. As usual, I'll cover their Wyckoff stage, potential price trend change, as well as key price levels. These are education content only, not financial advice. And if you're interested to access free dashboards as of this moment, go to Substack and subscribe to Asset Lens. There are a few samples for the past week already available. Now, let's get back to the weekly chart of ICP. Here, it is still going through the accumulation cycle of Wyckoff method, and looking at the volume, it's still staying at a pretty low level, even though we see a little bit of addition compared to the previous 2 weeks. It's still kind of lower than the average over the past 2 months. So at this point, the base case is range bound between two key levels. One is 2.05 and the other is 2.8. It has been with this range since early February. Okay, you see this bouncing over here. Some people will say, hey, is this a double bottom? And then is it going to go up? Let's see, okay? Well, it's supposed to get to a point when people are willing to come back. We'll see something called sign of strength. That means price advance with volume. Okay, if we look at what happened over here back in June, July 2025, that was the case. But then things turned south because of whatever macro environment or sentiment has driven the world to even deeper chaos. Okay, there are more of these cases that's telling us eventually when the volume comes back, the price goes to rechallenge the trading range top. In this case, currently somewhere around the green key level 4.35, and there's a bigger one, the blue key level 6.25, because for ICP it's a bit tricky. There was a mini FOMO that lasted for 3 weeks back in November, okay? And that's why we are seeing a lower trading range top compared to the initial one around the blue key level of 6.25. So the two main resistance level is 4.35, the green line over here, and then the second key resistance level is 6.25. Okay, I'm not going to repeat this red dash line, but just that when the price comes to this, besides the two lines that I mentioned, this is a line that's showing lower and lower FOMO top. Okay, so next time when ICP price comes up, it better goes above this line. All right, so micro view after talking about a macro picture. We see a mini breakout. Okay, 3 days ago on Wednesday, the price first broke outside of the downtrend ceiling. Okay, this is not the bigger downtrend. Okay, just to make it clear, the bigger downtrend is this one, this playground, this bigger box. We are within a very jerky, smaller, medium trend within that trend. Okay, because the price, like I said, is shot up to a mini FOMO and then quickly died down, returning to the bigger downtrend. Okay, it is still within that bigger downtrend. Just that we were talking about, like, if this trend is still continuing, one way to confirm that it is not the case is for the price to break outside of this trend box or channel, parallel channel again. And it did. Okay, after getting a serious rejection 3 days ago. Yesterday and the day before, that happened, that confirmation came. And these wicks from below, there were bulls working hard to defend this line. So If they're able to defend this line that's turned from resistance to support now, with healthier volume. And you see the past 2 days, the volume was higher than average of the past 2 weeks. So if that continues, the bulls would have a chance to challenge the 2.8 orange key level, like what they did back in mid-March, wherein we said, okay, by mid-March, we get a confirmation whether the downtrend will continue, and indeed it happened. So that back then we were talking about this, but we know the base case is that the range bound has formed, the sideways trading has formed between the 2.05 and 2.8. So essentially, it is like a dual or double confirmation. For one, this downtrend is seemingly over, after what the price did over the past few days. Unless all of a sudden, before the end of the month, it drops back to this triangle. We don't want to see that happen. If it travels right above or along the line and go back to challenge the 2.05, that's fine. All right? Because the downtrend has been broken. So the sideways trend becomes the new normal. Even better is that if this turns into an uptrend, okay, like what we were measuring back then, I shouldn't take out this line because we see the reference dates that we talk about. The dual option period. Okay, assuming this is the uptrend. And besides the April 24th, there's a date over here, May 10th. Okay, so that's where the dashed line crossing the orange T level, May 11th. If this uptrend continues, okay, let's say the candlesticks continue to climb, finding support along this line, then by mid-May, or actually the first 10 days of May, we'll get the confirmation. Is the price going to break outside of the sideways trend that started on the very first day of February, meaning breaking above the 2.8, or is it going to continue with the trend? Coming back down to first test this yellow dash line around 2.24 and all the way to 2.05. Okay, that's the picture for ICP right now. The very low volume indicates both teams, bulls and bears, aren't very committed at the moment. Now, let's move to FET. FET, interestingly, okay, it is going through the downtrend, right? And it has been suppressed first by the 2.68 green key level, and then for the 2 weeks later, including this week, even though there is higher than average volume and the price gone up slightly, it's been suppressed by the ceiling of this downtrend. So the paper hands diamond hands test continues. Remember, we said, okay, this kind of shaking is normal. Whether it's shaking slightly down, completely sideways, or slightly up, it doesn't matter. It's still test. So in terms of Wyckoff, it's still within the accumulation cycle. And if we look at the daily chart, we talk about this yellow box, the downtrend box already, right? You see how the price or the candlesticks, the price actions are being suppressed under the ceiling. And we talk about the 10th of May, where the ceiling crosses the uptrend, the short-term uptrend box, because the yellow box is the medium term, longer time period. This is a shorter term. We were measuring and we said, okay, this uptrend was broken and it turns into sideways, finding support above the 0.224. But then it's also been trapped underneath this yellow line. So when we get closer and closer to meet or the 10th of May, right at this cross, we'll get an answer. Is the price going to go above breaking the yellow box downtrend? Okay, or is it going to come back down? If it comes back down, okay, it is going to once again test the 0.184 yellow key level, okay, whenever it gets closer to any of these. Of course, if it's 10th of May, it has to pass this blue line and also the yellow dash line. That's the uptrend support, and that's this current sideways support that lasted for 16 days already. Okay, but it doesn't mean it cannot come back down, because that's what happened in the earlier period. It tested, retested, and then comes back down. This time, it lasted longer, and the volume overall seems to be getting a little bit higher. So, optimistic thinking, by looking at this, if the bulls continues to find these kind of support, the tendency of it traveling sideways, they're bouncing between this 0.224 all the way to 0.68 would become the new normal. And then once the war is the situation is kind of clarified, there is a chance for it to start to go in and challenge this higher key level. Right now, it's still a little bit early. Okay, we see these days, it's still have time. Finally, TAO. Okay, Bittensor also in the accumulation cycle of Wyckoff method, but it has just shown us a sign of strength. Okay, there's a good example of sign of strength after the automatic rally that set the trading range top of the accumulation cycle. We see sustained volume higher than average, okay, higher than average of the previous period, leading up to the automatic rally. We see the price return to challenge the 300 level, okay, that's where the price of AR, the automatic rally, reached. It actually went higher, almost challenging the purple key level 382, but then immediately got rejected, and it's coming back down. So like I said many times, even though it may not happen exactly the same every time, like what it did over here, but did not really have a sign of strength and retrace. But a lot of times, if you look at the other charts, let's say here, okay, from ICP, we see this volume slightly higher than average volume, price re-challenging the trading range top, and then the price would come back down. That's the tactics of the whales. If there are good news lining up, of course, they let the price shoot up until it gets exhausted and then come back down. They can shake people out again, let the price shoot up, but there are no good news going to continue, then they'll let the price drop. Okay, this is the second time the price challenged the blue level of 350 and then get rejected. You see the long wicks, okay, back to around 300. But this week it dropped even lower, slightly lower than the green key level of 268. So that's why I say the risk is there. If you ride this wave, and if it's a sign of strength, expect very common that the whales are going to shake the price down again. And remember I said there are a bunch of economic data from the US lining up in April, and then in May we've got new FET chair. That's going to change the game. Of course, it depends on how all those wars are going to change the world. Maybe for quite a long time, if not permanent. Okay? Daily chart of top. See this dropped below the ascending trend. That's why I said, okay, the sign of strength has shown up, but it may be, or the whales may be shaking the price back down. Look at how much the selling volume was yesterday. Okay, dropping below the 268. Today, the bulls try to climb back to above 268. They are not successful yet. Okay, so these days, the drop happened way earlier than the 18th. Okay, the price found support, so it passed the 7th, but when it gets into this triangle, like I said, it can either confirm one thing, break outside of the trend, or continue with the trend breaking a resistance. And it did the first. So here, it hasn't really formed a new trend yet. Or at least there's no sufficient reference point, but we can still draw a rough playground or air hockey table. Okay? It is a very narrow range right now. From experience, I expect it to widen, so we have to adjust the box later. But if it really is doing the thing that, dropping within this narrow range, let's use this one because the date has passed. Here, it's pointing. It's not letting me put, this is like half a day, so that's fine. So let's adjust this a little bit upward. So it crosses the 17th of April. So here, where this ceiling crosses the yellow support line of 220 is somewhere near April 17th. So in the next few days, if the price continues to be suppressed by 268, the green key level, but finding support along 220, it is getting into this gap again. Okay? Now you're more familiar than I do. Only two options, right? Either break the trend or break the support and continue testing the lower support along the trend, which back in February, March, is completely possible. 180 or even 140. All right? It's just a matter of how quickly it drops. Okay? If it is a more gradual trend, then we have to adjust the channel. If it's really as steep as it is, if the economic data coming out from US or the Middle East situation worsen, then this steep slope is still going to be possible. If you're interested to access these sessions 2 days earlier, like the current members, join the channel membership now. And remember, the Substack dashboards are currently still free. Go check it out. Thank you. See you in the next video.